So if you look at the last 30 years, the S&P 500 has returned roughly 7.5%. That's 7.5 to 8% is what the stock market returns over the long run. I know we've been going through some crazy bull markets here recently. If you look at multifamily and even small residential properties, over that last 30 years, you look at an average annual return of around 13.5%. Self-storage has returned an average annual return of 17.5%. Now, that 4% between multifamily and self-storage may not seem like a lot, but you got to realize that that's 4% compounding. So if you had $100,000 to invest and say you put that $100,000 in the self-storage market in 1990, that 100,000, if it was in the S&P 500, you'd have about $500,000. If it was in multifamily, you'd have about $1.8 million. That 100,000 in the self-storage space would be a little over $4.1 million. So double the return of apartment buildings and small residential portfolios, even though it's only at 4%. Compounding interest is a very interesting thing that our brains are not good at calculating. We look at everything in a very linear fashion. It's just kind of how our brains work. Whereas, compounding action is very difficult to see without looking at data.
Yeah, absolutely. Yeah, it really makes such a huge difference. Just a few percentage points, like you were saying, can make just millions of dollars of difference in the long term.